Imagine. One day, you have millions of dollars in the world's most trusted crypto exchange. The next day, all your money is gone. This isn't just a nightmare, it's a true story experienced by millions in 2022. The FTX collapse surpassed even the biggest scandals on Wall Street. And the culprit was someone no one expected. From a small office in Hong Kong in 2019, FTX became the world's second-largest crypto exchange in just 3 years. Its founder, Sam Bankman-Fried, a mathematical genius and MIT graduate, was on Forbes' youngest billionaire list with a net worth of $26 billion at just 30 years old. But the story's origins go back much further. Born in California in 1992, Sam grew up in a privileged family. His father, Joseph Bankman, was a professor of tax law at Stanford University. His mother, Barbara Fried, was a professor of economics and law at Stanford. The home was constantly filled with intellectual discussions. Money, math, and ethics were discussed at the dinner table. As a child, it was clear that Sam was different. He was winning chess tournaments at age 8 and solving college-level math problems at age 12. While his friends played video games, he was studying stock market charts. Sam attended Crystal Springs Upland School in high school and won gold medals in the Math Olympiad. His teachers described him as one of the smartest students I've ever seen. But Sam wasn't just smart, he was also ambitious. "I'm going to change the world," he constantly said. When he entered MIT, he chose physics. But his true interest lay in finance. Even during physics classes, he would analyze stock market charts on his laptop. His professors noticed this, but Sam's grades were so good that they didn't speak up. During his years at MIT, he was introduced to the effective altruism movement. According to this philosophy, the best way to live was to earn maximum money and donate it to charity. Sam became a passionate advocate of this philosophy. "I'll be a billionaire, but I'll donate 99% of it," he told his friends. After graduation, he went to Wall Street. Jane Street Capital was one of the world's leading firms for quantitative trading. During the interview, managers recognized Sam's mathematical skills and immediately hired him. He worked 12-hour days from day one. His years at Jane Street became Sam's true education. He learned everything about arbitrage trading, risk management, market microstructure. But most importantly, he recognized the inefficiencies in the crypto markets. Bitcoin's price fluctuated across different exchanges. This presented a perfect opportunity for arbitrage. In 2017, he decided to leave Jane Street. His family was worried. "You have a secure job, why take risks?" they said. But Sam was determined. He would start his own company, Alameda Research. Where did Alameda County come from? Alameda County is where Sam grew up. But what really mattered was the company's business, crypto arbitrage. Profiting from price differences on different exchanges. They started with $10,000 on the first day. By the end of the first month, that figure had reached $1 million. They were making $25 million in profits a day. How? Mathematics, technology, and speed. The algorithms Sam developed could execute thousands of transactions in milliseconds. They could buy Bitcoin from Japan and sell it to Korea in a single second. Even if the price difference was only 1%, the sheer volume represented enormous profits. By 2018, Alameda had reached $600 million in daily trading volume. Sam was a rising star in the crypto world. But his real plan was much bigger. He wanted to start his own crypto exchange because existing exchanges were so inefficient. That's how the idea for FTX was born. When he founded FTX in 2019, Sam was only 27. Why Hong Kong? Because regulations were more flexible there, and tax rates were lower. But Sam's true vision was much bigger. Existing crypto exchanges all had problems. They were slow, complex, and constantly crashing. Where did FTX get its name? Futures exchange. Sam knew crypto derivatives were the future. Spot trading had low profit margins. But derivatives had much more money. Their first office in Hong Kong was just 200 square meters. Pizza boxes sat on the tables, mattresses on the floor, and whiteboards filled with mathematical formulas on the walls. The team was very young: Caroline Ellison, 25, Gary Wang, 26, Nishad Singh, 24. All graduates of universities like MIT and Stanford. They all believed in the same philosophy of effective altruism as Sam. Their workload was incredible. 16 to 18 hours a day, 7 days a week. Sam barely slept. He took amphetamines to concentrate. Sleep is for the weak, was his motto. Their workload was incredible. 16 to 18 hours a day, 7 days a week. Sam barely slept. He'd take amphetamines to focus. Sleep is for the weak, was his motto. FTX's first client was Sam's former company, Alameda Research. This was strange. So, Sam was trading on his own exchange with his own company. But no one paid attention at the time. 2020 was a breakthrough year for FTX. The COVID pandemic sent crypto prices soaring. Everyone was sitting at home trading crypto. FTX's daily trading volume jumped from $50 million to $500 million. They grew tenfold in just 1 year. But Sam's true genius was in marketing. Other exchange owners acted like traditional businesspeople. Sam was different. He mastered social media. He was constantly sharing memes on Twitter, speaking to crypto communities on Reddit, and appearing on podcasts. In 2021, he moved to the Bahamas. Why? It was a tax haven and far from U.S. regulators. He rented a $40 million penthouse in Nassau. But it wasn't just a house. It was also going to be FTX's headquarters. The story of this penthouse is interesting. 12 rooms, a pool, a private beach, a helipad. And 10 people lived there: Sam, Caroline, Gary, and other senior executives. They all lived in the same house, constantly working, constantly spending time with the same people. Work and personal life were intertwined. Sam and Caroline dated. But Caroline was also the CEO of Alameda. Gary was Sam's best friend and FTX's CTO. Nishad was FTX's director of engineering. These close relationships would later cause major problems. Much has been written about their Bahamian lifestyle. They were constantly gaming, taking LSD, and engaging in polyamorous relationships. But Sam denied it. "We're all focused on work," he said. The truth was much more complex. The financial growth was incredible. By 2021, FTX's daily trading volume reached $15 billion. They became the world's second largest exchange after Binance. Sam's personal fortune had also reached $26 billion. Forbes ranked him among the world's youngest billionaires. But the real craze began in marketing. The Miami Heat renamed their stadium FTX Arena for $135 million. This wasn't just a name sponsorship. Millions of people would see the FTX banner at every NBA game in the heart of Miami. The Tom Brady deal was much bigger. A 10-year, $20 million deal with the world's most famous NFL player. Brady wouldn't just be doing advertising, he would become a partner of FTX. Gisele Bündchen was also involved. The couple became the face of FTX. Stephen Curry, Shaquille O'Neal, Trevor Lawrence, Naomi Osaka. They all became FTX ambassadors. In the Super Bowl commercial, Larry David said, "Don't trust FTX," but ironically, the ad cost $13 million. Formula One, MLB, NBA. FTX was everywhere. It sponsored the Mercedes F1 team. Kevin O'Leary signed Mr. Wonderful. He became FTX's spokesperson for $15 million. These marketing expenses reached $1 billion annually. Sam said, "We're buying trust." And it was working. People began to see FTX as trustworthy as Tom Brady. Most importantly, Sam's personal image. Other crypto CEOs flaunted luxury cars, expensive watches, and private jets. Sam was different. Old t-shirts, shorts, and Allbirds shoes that couldn't even tie their shoelaces. His hair was always messy and unshaven. "I don't work for money, I work to save the world," he constantly said. He promised to donate 99% of his earnings. He announced that he had donated $160 million to effective altruism. By the beginning of 2022, FTX's value had reached $32 billion. Sam was now the king of the crypto world. But the kingdom would soon collapse. At the beginning of 2022, the crypto market began to collapse. Bitcoin plummeted from $69,000 to $15,000. Luna Terra collapsed, Celsius went bankrupt. The market was in a bloodbath. The total crypto market capitalization plummeted from $3 trillion to $800 billion. It was one of the largest asset collapses in history. But Sam was a hero amidst this chaos. He was saving other crypto companies. He loaned BlockFi $400 million. He acquired Voyager. He was called the White Knight of the crypto market. These rescue operations weren't just marketing, Sam could actually save these companies. Alameda Research was making enormous profits. They announced $3 billion in profits in the first half of 2022, while FTX had 5 million customers worldwide. "We want to stabilize the industry," Sam said. He was a regular speaker on CNBC and Bloomberg. "This crisis is temporary, strong companies will survive," he said. Investors trusted him because FTX was staying afloat. But behind the scenes, something else was happening. Alameda Research was actually incurring significant losses. They lost $40 million in the Luna Terra collapse. They lost $1 billion when Three Arrows Capital went bankrupt. They had invested $648 million in Robinhood stock, but its value was plummeting. How did they cover these losses? By taking money from FTX. Sam was transferring FTX's client funds to Alameda. But no one knew about it. FTX's terms of service stated that client assets are kept separate. Caroline Ellison was Alameda's CEO, but Sam was actually making the decisions. "Sam called me emergency, and we took $1 billion from FTX," Caroline later admitted in court. This wasn't a one-time occurrence, it was a constant occurrence. The first suspicions began in mid-2022. CoinDesk reporter Ian Allison noticed strange things on Alameda Research's balance sheet. A large portion of the company's $14.6 billion in assets were denominated in FTX token, FTT. This tied Alameda's value to the value of FTX's own token. Why was this a problem? If FTT's price fell, Alameda's balance sheet would collapse. And Alameda was FTX's largest client. This created a circular reference, a circular dependency. Ian Allison wanted to publish this story, but his editors hesitated. "This is too technical, readers won't understand," they said. But Ian insisted, because this information suggested Alameda was about to go bankrupt. Around the same time, there were other signs. An engineer working in FTX's Japan office noticed that client funds were lower than expected. He contacted managers in the Bahamas and was told it was a temporary liquidity problem. FTX's risk manager, Constance Wong, was also concerned. She saw that Alameda held very large positions in FTX. "This exceeds the risk limits," she said. But Sam dismissed it by saying, "Alameda is our partner, it's fine." Meanwhile, Sam's personal spending was also attracting attention. A $40 million penthouse in the Bahamas, a $30 million private jet, $90 million in real estate purchases for his family. No one seemed to ask where this money came from. Political donations were also problematic. Sam donated $40 million to the Democratic Party in the 2022 elections, making him the party's second-largest donor. But where did he get this money? Spreadsheets found on Caroline Ellison's laptop would later reveal shocking facts. These spreadsheets showed money transfers from FTX to Alameda, totaling $12 billion. In July 2022, Sam tweeted, "FTX's balance sheet is very strong." But Caroline would later admit that Alameda had borrowed money from FTX to cover a $2 billion deficit during that same period. Another shock came in August. Sam's brother, Gabe Bankman-Fried, revealed that he had taken a $10 million loan from Alameda Research. The entire family was involved in the scheme. During this period, FTX was still growing. Daily transaction volume was breaking records. New users were joining. But the foundations were crumbling. In September, FTX launched a new investment round. It was looking to raise $1 billion. Large funds like Sequoia Capital and SoftBank showed interest. However, during the due diligence process, some investors began asking questions about the Alameda relationship. Why does Alameda have such large positions in FTX? One investor asked. Sam dismissed the situation by saying, "They're professional traders, they make big trades." In October, another critical development occurred. Alameda's former partner, Sam Trabucco, left the company. The official explanation was personal reasons. But the real reason was concerns about Alameda's financial situation. Sam Bankman-Fried is taking too many risks, Trabucco privately said. If this continues, it's going to end badly. In late autumn, suspicions were growing among FTX employees. Some engineers working in the Bahamas office began noticing anomalies in the system. Alameda appeared to have special powers at FTX. But no one could predict the extent of the situation. That is, until CoinDesk's famous news story broke. November 2, 2022. CoinDesk published Alameda Research's leaked balance sheet. A large portion of the $14.6 billion in assets consisted of FTX tokens. This meant that Alameda's value was tied to the price of FTX's token. But the real shock came on November 5. Binance CEO Changpeng Zhao announced that he would sell all his FTX tokens. Due to recent information, he said. After this announcement, the FTX token dropped from $24 to $2. Panic ensued in the market. FTX users began withdrawing their funds. $5 billion in withdrawal requests arrived in one day. But FTX didn't have that much money. Why? Because Sam had transferred his clients' funds to Alameda. On the night of November 6, Sam was posting "everything is fine" messages on Twitter. FTX is secure, customer funds are kept separate, he declared. But he was also in talks for Binance to acquire them. On November 7, Binance announced, "The problems at FTX are so deep, we can't buy it." At that moment, everyone understood, FTX was bankrupt. November 11, 2022. FTX filed for bankruptcy. Sam resigned as CEO. But the real shock came next. Bankruptcy Administrator John Ray's reports were unbelievable, $8 billion in lost customer money. $1 billion in corporate loans used for Sam's personal expenses. $300 million in Bahamian real estate purchase. $40 million in private jet. $15 million in political donations for Sam's family. "I've never seen a crash like this in my 40-year career," Ray said. Worse than Lehman Brothers. But the story doesn't end there. How did Sam steal so much money? Alameda Research had a secret agreement with FTX. Alameda had unlimited access to credit at FTX. These credits were secured by FTX's own token, FTT. Alameda used this money for crypto bets, political donations, and luxury spending. Worst of all, customers thought their money was safe. FTX's website stated that customer assets are segregated. Sam even said on CNBC, "We never touch customer funds." The FTX crash isn't just about numbers. Real people's lives were ruined. Kevin O'Leary, the famous investor nicknamed Mr. Wonderful, lost $15 million. But the situation was even worse for small investors. A retiree named John had his entire retirement savings in FTX, $400,000. He lost it all in one night. A teacher named Sarah lost $50,000 she'd saved for her children. They said it was the safest stock market, she said through tears. A total of 9 million people were affected. The amount lost? $8 billion. That was even bigger than the Enron scandal. December 12, 2022. Sam Bankman-Fried was arrested by the FBI in the Bahamas. The charges were serious: fraud, money laundering, campaign finance violations, theft of client funds. He was extradited to the U.S. in March 2023. Shocking details emerged in court. Caroline Ellison, Sam's ex-girlfriend and Alameda CEO, confessed to him. "Sam told me to use client funds. I objected, but he said it was temporary." Gary Wang, co-founder of FTX, revealed that Sam had given Alameda special powers. Alameda could run a negative balance. No other client had that right. October 25, 2023. The jury returned its verdict, guilty on all 7 counts. May 2, 2024. Judge Lewis Kaplan announced the sentence, 25 years in prison. "The scope and impact of these crimes are enormous," the judge said. Thousands of people lost their life savings. It's not just money, dreams and futures were stolen. Sam's final words to the court: "I'm sorry. I let our clients down. Too little, too much. Debatable. But most FTX customers will never get their money back." The FTX crash profoundly shook the crypto world. Bitcoin plummeted to $15,000. The market's total value eroded from $3 trillion to $800 billion. But perhaps the biggest loss was the loss of trust. People lost trust in crypto exchanges. The slogan, "Not your keys, not your crypto," became even more popular. Regulators took action. MiCA regulations in the US, new rules in Europe. Now, crypto companies are under much stricter scrutiny. The story of Sam Bankman-Fried is the biggest scam of modern times. Behind the facade of an MIT graduate, billionaire, and philanthropist, was an $8 billion theft. FTX wasn't just an exchange. It was Sam's image, marketing genius, and public trust. Celebrities, athletes, ordinary people. They all trusted him. This story teaches us an important lesson: when it comes to money, never blindly trust anyone. Even the brightest diamond can be fake. The FTX collapse will be remembered as a dark day in crypto history. But perhaps this collapse was a necessary blow to make the industry safer and more transparent. Sam Bankman-Fried will now spend 25 years in prison. But the money and trust he lost will never come back. This was a financial story from FinArch. The crypto world's biggest crash, the rise and fall of Sam Bankman-Fried.